Hi, it's Conor Svensson here, founder and CEO of Web3 Labs, and this is your Week in Blockchain on Monday the 27th of September 2021. The highlights this week include China has cracked down on crypto trading, Binance is now being investigated by the SEC, Coinbase has ceased plans for its lending product but is proposing for US crypto regulation approaches, Twitter has added support for Bitcoin tipping, DeFi has outperformed traditional finance by over 1,600% in the last year, and Snoop Dogg reveals himself as an NFT whale. Firstly, apologies. This week I've got a bit of a cold, so my voice is slightly hoarse, but hopefully next week it'll all be back to normal there. So China this week actually issued tougher measures to crack down on people trading and holding crypto assets. They basically outlawed anything to do with crypto. Previously, a few months back, they'd outlawed crypto mining, which sent the prices of Bitcoin and many of the leading cryptos tumbling, and now they've actually said that it's illegal to actually trade and hold crypto assets as well. So this also means exchanges that enable people to change fiat currencies for crypto and back and forth, they're now treated as illegal as well. And so it's a significant knock to the overall industry, of course, with the Chinese government doing this. However, it does seem that there are still some OTC services that are accessible from Huobi, OKX and Binance at this point in time. The price of Bitcoin dropped about $2,000 off the back of this announcement by the People's Bank of China, but it's definitely one to keep an eye on because it's certainly not good for the crypto markets more broadly. But at the same time, one would hope that it's going to be isolated to China rather than likely to see other regulators follow suit. Officials in the US are now investigating Binance for potential insider trading, according to Bloomberg. So they're looking at whether Binance or its staff profited by taking advantage of their customers. And you've got the Commodities Future Trading Commission, the CFTC, who are actually involved in this investigation, as well as activities that have been happening with the Internal Revenue Service too. So it's certainly going to be one to watch very closely. And whilst the trading of cryptos and the front running of it is something that's, given they're available to anyone, is something that is potentially a problem. But if you've got the US regulator stepping in to potentially look to target US citizens there, it could be quite problematic for people who are engaging in such practices. Binance also have ceased their crypto futures and options products in Australia as well, and this is of course off the back of the increased ongoing regular scrutiny that's been going on there. So Coinbase, that we spoke previously about their tussle with the SEC about their plans to launch an actual crypto lending product, and so this would have been bridging Coinbase with some of the DeFi ecosystem, allowing people to earn yield on stable coins such as USDC. However, in a blog post they've announced they've decided not to actually move forward with this, no doubt from the pressures from the SEC there, and Coinbase wanting to ensure that they keep the regulators on side with them. However, Coinbase apparently are also preparing to pitch a proposed regulatory framework to federal officials. There's not further details available of this at present, but certainly given Coinbase's position within the US market, they'd be well placed to provide such insights to help lay out what could be sensible approaches to support regulatory needs. Off the back of the crackdown in China, the crypto exchange FTX has also established subsidiaries in Gibraltar and the Bahamas. It makes sense, FTX being one of the big, especially institutional trading venues. They're currently based in Hong Kong, but having these, given what's happening more broadly within China, it seems like a sensible move to try and distance themselves from the People's Bank of China there. Genesis Digital Assets, they've raised 431 million with Paradigm leading the round. So Genesis Digital are a Iceland headquartered Bitcoin mining firm. They've been around for quite a long time. They've had a number of other strategic investors in the round, including NYDIG, Stoneridge, FTX, Electric Capital and Kingsway Capital. They launched in 2013, and what they're looking to do with this investment is to increase their hash rate expansion, which basically means how much Bitcoin they can actually mine given the amount of computing power they have. Certainly being based in Iceland has been helpful given the availability of cooling because of the climate there, and also technologies such as geothermal for creating electricity. So it's no doubt a big success story there. Twitter, they've actually rolled out after a lot lot of discussions about embracing Bitcoin support. They've actually rolled out Bitcoin tipping for iOS users using Bitcoin's Lightning Network. The Bitcoin Lightning Network is basically a layer 2 network for Bitcoin, which basically means it can handle much higher volume of transactions than the main Bitcoin network. Basically, what this feature enables people to do is to actually tip creators through services like Cash App, which is operated by Square, which is also founded by Jack Dorsey, co-founder of Twitter. They want to make it accessible to people, so if they don't have Bitcoin, they can easily get hold of them as well. IRS, the Internal Revenue Service in the US, has said that it plans to award a contract for a crypto startup that provides cross-chain tracing software. The idea of cross-chain is basically tracing transactions that go from one blockchain to another. So say if you had an asset on Ethereum and then you transferred that across to Cardano, it enables you to actually capture those bridge transactions. Certainly the tax reporting software has got a lot better in recent years for actually tracking details of people's activities on exchanges, but also what they do with their own personal hardware wallets or software-based ones, such as the widely used MetaMask browser-based wallet. But the thing is that when you actually move assets from one blockchain to another, it gets a little bit harder there. So the IRS is clearly trying to ensure that they have a way of capturing this information and just in part to no doubt find people who aren't declaring their tax gains, but also it's kind of a natural evolution of the systems as well, that given the different platforms that people are using for things like DeFi and NFTs, it makes it easier to actually trace the various activities that are happening there. Kind of tied in with this as well, the Homeland Security in the US Department of Homeland Security in the US has actually signed a deal with Coinbase to use its blockchain tracing software, which is called Coinbase Analytics. This apparently is a deal that's valued at $450,000 for 1 year, but could go up to over 1.4 million by 2024. And so if it does go to there, it will be the largest government contract for Coinbase Analytics. But again, more generally, this is Coinbase is in a very powerful position because they provide like the main crypto trading platform in the US. They're not the largest exchange. Binance is the largest exchange, but Coinbase is certainly one of the largest, I think second. But the point is there that given all of the information they are privy to, be that how they interact and transact with crypto markets, they no doubt have a lot of tooling there, but also the number of people trading on that, it's a no-brainer for them to actually produce analytics software. It's like in the same way that, say, with Google, for instance, the US government wants to track activity by nefarious actors. For instance, they could just go to Google and say, hey, what can you give me on this? And from Coinbase's perspective, it kind of seems like a natural business opportunity for them. But of course, you get into that whole argument about the lack of decentralization there, it being a centralized service, and so on and so forth. Blockdaemon, they've raised 155 million in their Series B raise, which has given them a valuation of 1.3 billion. So what Blockdaemon do, they provide blockchain staking infrastructure, and they plan to use the funds to expand its teams in Singapore, Japan, the UK and Germany, and also look to make strategic acquisitions as well. So it's actually apparently they're the biggest blockchain infrastructure company in the world for node management and staking, and other people who were involved in this round included Matrix Capital, Sapphire Ventures and Mortgage Creek Digital. Over in the protocols news, Optimism, they've published a blog post where the team is anticipating Ethereum native protocols to launch on its network in a single click by the end of October. We've spoken previously about Optimism as one of the scaling or layer 2 technologies launching for the Ethereum network. Their delay has been it's been put back. Originally it was going to be, I think it was April, and then now we're obviously into September, but and so in the meantime, Polygon's got quite a lot of traction, but Optimism's got a very solid team behind it. And, with this announcement, what they're really doing is they're wanting to make it as simple as possible for people to actually run on top of the network, because these Ethereum scaling chains, you need to have the barriers to entry as low as possible for people to actually use them. You don't want them to have to rewrite smart contracts or rewrite their deployment tools and so on, because it just creates barriers to actually embracing them. And so, it's a smart move by Optimism to really, propose this idea that it's like literally a single click to actually get it done. And so if you've got something that targets, one of the Ethereum clients or node software, which you interact with these smart to deploy deploy or call smart contracts apparently can just work with Optimism as well. So it's definitely a good innovation on their part there. The founder of BitClout, the kind of decentralized social platform, they've revealed what he's called DeSo. And so this is someone who uses the pseudonym Diamond Hands, who's Nada Al-Naji, who's a former Google engineer who created Basis. That was a stable project that raised over 100 million back in 2018, but then they pulled the plug on it because of concerns about the regulator. But now he's promoting BitClout, not only BitClout, sorry, but also a blockchain that's called DeSo, which apparently is hosting over 100 apps, but they're all about providing decentralized social networks. So they want to ensure that people's social media profiles and their friends and connections, that people can find ways to actually own that data and have control over it, basically, and create tokens or some sort of incentive mechanisms that enables people to create their own value from these networks, rather than the funds going to centralized providers such as Twitter and so on and Facebooks and so on. Again, it's very ambitious, these plans, because there's they're trying to encourage people to move off these incumbent platforms, so to speak, and so it makes sense that people are being very ambitious here. But it's certainly it's a big ask, though, if you want to try and get people to stop using Facebook or WhatsApp or Instagram or Twitter or whatever else there. So one to watch, but definitely great to see those lofty ambitions there. We spoke last week about the downtime of the Solana network, where it was down for around about a day, and apparently it was due to a denial of service attack that took place. So it was offline for more than 17 hours, and the Solana Foundation, who are responsible for maintaining the network and creating the software and everything else that people run it, they issued a post-mortem, and they said that the network was actually overwhelmed by incoming transactions, i.e. the denial of service attack, which went up to 400,000 per second, and this started when a certain IDO, or initial decentralized exchange offering, which was hosted on the Solana network called Radium, happened. On that IDO, there was this thing called Great Protocol that it was overloaded by transactions. And so it's not been said if it was literally just demand for the project there, or whether it was actually people trying to attack the network, but no doubt they'll be taking on a lot of the learnings here and hoping that it doesn't happen again, because it certainly doesn't do them, isn't good for their reputational risk, this sort of stuff. Sommelier, which is a co-processing protocol on the Ethereum virtual machine, they've announced a partnership with Mysten Labs, where they actually want to provide smart contract applications on top of the Cosmos blockchain. So Cosmos is one of the so-called interoperability blockchains, and so by providing smart contract applications on it, it just makes it easier for people to, say, take Ethereum code, for instance, and actually run it on top of that blockchain and then transfer it across. And this would enable people to, new opportunities for, say, DeFi or other initiatives where you can actually have applications that go from Cosmos to other different exchanges there. So it's a big area at the moment, the whole thing of interoperability. We've spoken already about the regulatory want for this, but as well, we know too that certainly for developers and so on, and just people who want to get into DeFi, they want to have the sort of flexibility there to move things across, so they're not really stuck to one blockchain as such. Dfinity, their internet computer blockchain, they're bringing smart contract capabilities to the Bitcoin network. The internet computer, which is by Dfinity, they had an incredibly successful token sale earlier this year, which at one point it got them into the top 10 projects by market cap. And what they've done though is they've created a mechanism for smart contracts to be created with native Bitcoin addresses there as such. This is kind of one of the first big announcements from them in terms of actually bridging to other platforms. Dfinity itself, though, they've got a very significant amount of funding, and they launched a 220 million developer ecosystem project earlier this year as well, and so they've received backing from some of the biggest names in crypto. So it'll definitely be one to watch, but can't really go into the details of how it works at this point. Cardano, they've announced a dAppStore for what are called certified DeFi applications. So Cardano, we've spoken a lot recently about how they're launching their smart contract platform, and what they want to do is have like a dAppStore, decentralized app store to make it easy for people to discover these decentralized apps. Certainly, if you look at what's happening in the Ethereum networks and many of the other ones, you've got websites which aggregate what are the popular protocols, but they're not really positioned as apps as such, in the same way that apps are on the Apple or Google app stores. And so it's an interesting initiative to see how Cardano goes with this, certainly because Cardano, and it's a similar thing as well with many of the other third generation blockchain protocols, is that they're predominantly being maintained and created by like a single company entity. And so what this means is they have kind of a little bit more control over how they create the ecosystem around it. And it's not to say that they're not kind of decentralized in their approach, but with Polkadot, Cardano, and various others, they have single companies who've got a lot of funding, who've typically got them to a certain point in time, and they are removing themselves from the governance process. But at the same time, because they have a lot of sway in the community, they're able to get these initiatives off the ground. Whereas with some Bitcoin and Ethereum, it's slightly more grassroots in terms of how they've grown up, and so you don't kind of have single companies that have almost control the same level of control around the ecosystem. So it certainly has the potential to be very big, this approach, but it's another one to watch to see how it evolves there. Portal, a DeFi project, has managed to actually raise 8.5 million. What they're looking to do is bring a DeFi ecosystem to the Bitcoin blockchain, and they've got Coinbase Ventures and others investing in the round. And what they want is censorship-resistant layers on top of the Bitcoin base layer. This is something that Jack Dorsey from Twitter has spoken a lot about, this idea of being able to have smart contracts and DeFi infrastructure on the Bitcoin network. I don't believe he was involved in this raise as such, but again, it'll be interesting to see how it evolves, especially when you hear what Internet Computer have announced as well with their Bitcoin-enabled smart contracts. It is questionable whether it's the best use of the technology, because really what people are trying to do there is take, for second generation and third generation blockchains, kind of provide out the box in their base protocol. So your Ethereums, your Cardanos, Polkadots, Solanas, they kind of natively support this notion of smart contracts and programmability. Whereas Bitcoin wasn't really built for that. So these are kind of solutions that people are trying to lay on top of it. So certainly they're big ambitions to have, but it does make it slightly harder for them to do that. There's been an announcement of a new partnership, and this is between Panther Protocol and Polygon. So Polygon was one of the leading layer 2 scaling technologies for Ethereum. And what they're looking to do here is provide interoperable, privacy and compliance-friendly selective disclosure mechanisms on the Polygon network. So really, this is about providing good quality privacy technologies. This is using what's called ZK snarks, which is a type of zero knowledge approach there, which basically is the main approach that's being taken for privacy enabling on top of public blockchain networks. And so what it enables them to do basically is to share information using these decentralized apps that are running on top of the platform there, providing just a bit of protection about the underlying data there. So it's a space that's moving incredibly quickly around the privacy and the zero knowledge proof type technology, but Polygon certainly seems to be moving in leaps and bounds with regards to these new partnerships and who they're working with on these different initiatives. A report that's come out as well, apparently the DeFi ecosystem has outperformed traditional finance by 1,662% in the last year. So where you've seen like DeFi go from a $1 billion industry to over 100 billion, and with everything that's been happening across Ethereum, Binance Smart Chain, Solana, Avalanche, Polygon, and so on and so forth. When you actually add up the amount of what they call the gross value locked across all the different blockchains like Ethereum, Solana, Avalanche, Polygon, Binance Smart Chain, apparently that figure is over $120 billion. It's being dominated by Aave, SushiSwap, and Compound. Allegedly, though, the big DeFi protocols on Ethereum have accumulated $2.36 billion in revenue since July 2020, which is a phenomenal return. And so this was a report that came on from Tokenist there. The decentralized exchange aggregator 1inch, they've added support for the Arbitrum scaling solution. So this is another one of the scaling platforms for Ethereum that's certainly getting a lot of attention alongside Polygon and Optimism, which we've touched on earlier on. And so 1inch adding support for it basically means that people can use that scaling solution alongside others should they want to there. So when you see these other big protocols like 1inch integrating with them, it basically means that people are interested in the opportunity that that protocol provides. So it would kind of call out that Arbitrum, there's 1inch feel it's worthwhile actually providing the integration points there for their user base. Kava announced a $180 $185 million DeFi fund. So this is come from Kava Labs, and what they're looking to do is grow the Kava ecosystem. And so this is they're trying to incentivize DeFi projects here, but of course so many different protocols are creating these massive funds for incentivizing people to build on on top of their platform. So they're really jostling with a number of other companies in that respect. The blockchain entertainment company Animoca Brands has acquired a majority stake in a NFT solution provider called Bondly. This is basically because Bondly is working on NFT swap protocols and cross-chain NFT minting and bridges. Again, like with DeFi and just general crypto assets, people want to be able to easily exchange them across different blockchains, and so it just kind of makes sense for them to make these strategic investments there. The fantasy soccer NFT platform has managed to raise a $680 million Series B fundraise, which was actually led by SoftBank. They've really got a who's who of some of the VCs here, alongside, of course, SoftBank. They've also got Benchmark and Excel there as well. So some very big names in the VC industry. And what's Sorare, I should say, do is they let fans of football-based NFT trading cards of well-known footballers like Cristiano Ronaldo, and they enable people to basically trade them with one another. So you can think of it as like a football trading cards game that's runs on top of the Ethereum blockchain. But the card sales so far this year have been $150 million. So it's a massive valuation there that they've got, which takes them up to 4.3 billion, and they've got apparently over 600,000 regular users and licensed players from over 180 football clubs as well. So definitely one to watch, and they're really spun up so quickly. But of course, football's an incredibly popular game, so it makes sense that people want to jump on board with this. But also it's another demonstration of how NFTs have kind of been that engine that one could argue have brought blockchain technology mainstream. It's crossed the chasm, so to speak, because with these sorts of revenues and valuations, that's not just your people who are crypto speculators getting involved. That's like people who really are quite invested in what's being achieved here and the platform that's being built out there. So it's definitely one to keep an eye on. Fortune, they disclosed recently some auctions that took place that we reported. They raised over 1.3 million when the auctions happened, but over half of it was split between a number of different press organisations. So this went to Reporters Without Borders, the Ground Truth Project, the Institute for Non-Profit News, and the Committee to Protect Journalists. They all received almost 165,000 ETH from the sale of these NFTs, and so they clearly created these because they want to support the wider journalist system. Again, what we're seeing with many NFT sales is that, yes, at one level you have the speculators there who are getting involved, but you also have a lot of companies finding it as ways to earn, raise money for good causes too. Snoop Dogg, the rapper, has revealed himself as a NFT whale on Ethereum with his $17 million collection. So he announced that he was Cosome de Medici, who was a NFT collector who joined Twitter in August. He's been tweeting a lot about his NFT journey and discussing all the different NFTs that have been getting sold and everything else in recent months. But apparently, though, his the collection, according to the wallet associated with this account, has some pretty significant NFT investments in there, including 9 CryptoPunks, which is estimated at 4.6 million, 10 Meebits, and a number of other things from like the generative artwork series Art Blocks. And so a number of these projects we've discussed previously, but it's it's entertaining when you see a character such as Snoop Dogg getting out there with it. He's also actually, off the back of this, selling 1,000 NFT passes for a private Ethereum Metaverse party. So he's partnered up with the Sandbox, and this is in a metaverse-based game that runs on Ethereum, and they're going to have a custom-themed environment with a mansion, playable Snoop avatars, and lots of weed-themed imagery, of course. And 650 of these NFT party passes are available on the Sandbox's marketplace, and then others will be sold elsewhere, such as Decentraland. And so Snoop's really trying to find ways to embrace and with this ecosystem. So another football-related NFT piece of news: Dapper Labs, the creators of CryptoKitties and NBA Top Shots, we've discussed a lot on this. They've got a collaboration with La Liga, who are the top-level Spanish soccer division. and its teams. So these are football teams like Real Madrid, FC Barcelona, Atletico Madrid, and so on. And what they're going to do is they're going to have a marketplace on the Dapper Labs Flow blockchain, which is going to be launching next year. They've also had another funding round as well, which this was a $250 million funding round, which gives them a valuation at $7.6 billion. So again, they're doing phenomenally well there. Time Magazine, they did a NFT sale this week as well. They sold 4,676 NFTs, which sold out in 1 minute, and the gas prices on the network went really high there as well, and these were sold to about 700 people. So again, incredibly successful. And so the actual NFTs had works from 40 artists. They were called timepieces, and it was really the company wanted to have another foray into NFTs, and they want to really create a community and loyalty with the brand here. And then finally, what's called the Wormhole, which is an NFT bridge, has launched, which is a bridge that connects Ethereum to Solana, which enables people to transfer assets between the different blockchains, and this is bi-directional. So again, it's something that we're seeing in a lot of places where it enables people to actually take a asset. Historically, it's been a crypto, like you could have wrapped Bitcoin, for instance, where someone takes Bitcoin, deposits it to a Bitcoin wallet, then they get wrapped Bitcoin that they can use on the Ethereum network. And so now we're seeing this across blockchains focused on NFTs as well. So certainly this isn't the first one to emerge. We've seen it as well, for instance, with the Palm blockchain and Ethereum, where you can purchase NFTs on the Palm blockchain and then transfer them across to Ethereum. But certainly with the NFT market right now, we're seeing arguably the most activities happening on Ethereum as well as Solana, and also Dapper Labs are doing a lot with their Flow blockchain too, but having these bridges in place is just going to make it easier for people to move them around, which is certainly a good thing for overall usability there. So that's all the news we have for this week. In terms of our metrics, the crypto market cap is down almost 12% to 1.92 trillion. Assets locked in DeFi are down just over 13% to 80 billion. 7-day NFT sales, they're down just over 6% to 236 million, with an average price down almost 50% to 2,650. That's all we have for this week. If you like what you hear, please subscribe to our podcast on our YouTube channel. Links to all items discussed are available in the show notes and on our website, weekinblockchain.com. We've also just launched a new podcast, Blockchain Innovators, where I speak to individuals who've made significant contributions to the blockchain ecosystem. Find out what inspires these people, get their thoughts on the latest industry news and events spanning crypto, blockchain, protocols, DeFi, NFT, DAOs, and IoT. Thanks, and I'll see you next week.